Hi, this is Drew Tignanelli. This is our August update, and we're into the weakest part of the year.
Yes, we are. Seasonally, it is a tough time.
Yeah. So, actually, today we're taping, and they won't get this for a week.
Right.
The Chinese stock market today dropped 8%.
Yep.
And that's amazing. 8% is a big drop, but it wasn't unexpected.
Right.
We sort of talked about this, that, if you try to hold a market up, like the Chinese stock market dropped by 30%
Yep.
between May and the end of June. And then all of a sudden the Chinese government came in and said, we're going to provide this support stabilization fund, and we're going to do this, and we're going to do this, and we're going to outlaw short sellers. Whenever you do that and you try to artificially stop a market from falling, it can work for a week, a month, maybe even a few months, but ultimately it falls apart because markets are bigger than any government and any central bank.
Yeah, and we mentioned that the interaction with the Chinese government, their manipulation. We've been talking about manipulation in the U.S. in the central banks. Now we have this Chinese manipulation, and we saw that if you look at that chart, and then it bounced back, and then over the weekend, coming into today. The market said, okay, we've got some troubles here. So, and then there's a little bit of contagion effect as well.
Well, the reason that it is a problem to some degree is that there were a lot of loans made to Chinese individuals to participate in that stock market. So, that's one of the beauties of I use that sarcastically. One of the beauties of China is that it's sort of the Wild West of investing. As we said in our last video or our last commentary, that the Chinese people are just like Americans. They want to get wealthier. They want to come up financially and
prove their standard of living.
So when the property market's going higher, they're doing whatever they can to get property. And when the stock market's going higher, they want to figure out how to participate in that.
Right.
And so you now have this drop that these people who have borrowed money to get into this incredible growth, 150% over the last year and a half.
Sure.
And so people are piling in at the end, and now all of a sudden markets take 30% drop. That means that everybody who got in after, about a 70 or 80% increase, probably were back to even, if not down.
Underwater.
So you go up 100%, and then you come down 30%. And you're back down to 14. Now the whole market's only up 40% after just a 30% decline.
Exactly.
And so think of all the people that got in late who are now underwater on their levered loans and the wealth effect that's causing on China. And this is why I think you're seeing commodity prices get slaughtered to some degree, and why, like you said, there's contagion possibilities.
Yeah, there's so many opportunities in China. There's so many people. There's a lot of things that they're actually doing pretty well, and it's having ripple effects and positive effects to the rest of the world. But we've got Europe, big exporter to China, and so there's going to be a ripple effect, to
their market's down 2.5% today. Yet our market, as of when we went in to tape this, we were only down like 0.5%.
Right.
I think there's this perception that the United States is insulated from all the issues that are happening in the world, and that we're this incredible growth engine and so forth. And we'll see. I think that the U.S. market has a chance of, headed into this weak period of time between now and September, to really show some weakness this next couple months.
Yep, and our market's a little bit focused on the Fed. The Fed's meeting this week. Nobody's expecting them to do anything with rates. But at this meeting, the thought process is still they're pushing it into the September meeting, and some people are even pushing it out to December of when is Janet Yellen and the Fed going to raise rates. We've been in the camp that we still think it's going to be now and in September, and then let things play out and see how the market reacts to that. But it's also that seasonally weak period of time.
Right. Well, you had this leak from the Fed of somebody saying that there was no intention, but there was a document that just got put in wrongly.
Right.
That said, that they are definitely going to raise in September. Now, they can change their mind come the September meeting,
Right.
but this document said clearly
Yeah.
September 0.25% increase.
Yeah, yeah, that's what it said. The staffers that can keep the data, it's, say, yeah, we definitely are indicating September. And we've seen some growth in housing, wages. There are some inflation things that they want, and they have no tools. They've run out of tools in the toolbox. They pulled back on the quantitative easing, and now they need to get rates to some kind of a reasonable level. People have earned zero for long enough, and the people that are retiring, the baby boomers, have no income stream, and they're being pushed into the equity markets.
That's it's kind of like the China thing, is that people are looking to make money and they can't make any in the bank accounts or CDs, so they're going into bonds, they're going into stocks, and if these markets are weak, I think you're going to get a lot of people starting to wonder what's happening, and it just becomes sort of a cycle. What we have to do is just maintain the course, because I think that you're going to get recovery into the end of the year, which is seasonally strong, and on through into next year. At least that's the way we view it at this point in time, unless we see something that changes. But I think we have a lot of liquidity that we can reposition for our clients if we need to.
Yeah. I mean, the bond market's been weak so far this year, both globally and in the U.S. The stock market, our market's been pretty volatile, trading in pretty much of a range. And the international markets up until this China thing have been fairly positive.
They won't be after the end of today.
Yeah, exactly.
Anyway, I think that the strategy is that we sit tight. We have plenty of opportunity to invest more money in the markets if we feel we need to.
Right.
We've been telling clients for some time that there's going to be an opportunity. When that opportunity comes, you just have to be ready for it.
Yeah, we've got a list of things that we want to purchase in portfolios, and we're just waiting, for that opportunity and get the right prices. Better prices than we would have gotten a week ago or 2 weeks ago.
So anyway, we'll give you more of an update in our September as to what actually is happening and where we're headed. I think it's going to be an interesting month or two.
Yeah.
But we'll see. We wanted to deal with a financial planning topic, and that financial planning topic would be identity theft. That's a topic that I'm getting a lot of emails about. Should I be signing up for LifeLock? What about this, government personnel management heist? I'm on the list. I'm one of 22 million or whatever. Every doctor client of ours that we did tax returns for, every single one's identity was stolen on their tax return. Not a single one that I know of had a tax return that didn't require them to file an identity theft thing and so forth. So this is becoming a very big issue. And what do you do? So what we're recommending to our clients is to do a security freeze. A security freeze is where you contact Equifax, Experian, and TransUnion. You tell them you freeze your credit files and that the only way somebody can get your credit information is by having your PIN number. And so you have a 12-digit PIN number, and whenever you want to thaw your account, so I'm going to buy a car, and I want to give the dealership permission to come and look at my credit account. So I thaw it with the credit bureaus by entering my PIN number in, and then they go and look, and then at the end of a set period of time, I normally would set like a week, it freezes again. Nobody can see that unless they have my PIN number.
Right.
And so it eliminates, LifeLock is merely monitoring your accounts. So if somebody does something, you're alerted, and now you have to go to the process of getting it closed down and, and whatever. Security freeze actually locks your credit bureaus down that nobody can establish credit. Well, I can't even do it. I've had a couple funny scenarios where I've gone in to get credit and I forgot to thaw my accounts out, and they denied me. I did one with this poor lady. I was getting a credit card, And she said, well, I have to read this thing. It's going to take about 10 minutes.
Right.
And she reads and she reads and she gets to the end of it. And she says, okay, I once went to a car dealership to buy a car and forgot to thaw my accounts, and they denied me.
Yeah, exactly. So it can run into some funny things like that, but the reality is it's not an expensive process.
It's $5 a credit union for you and your spouse, so it's $30.
Yeah.
The way I'd suggest you can either call here and we'll send you the information. It's a one web page
Right.
that we send you. It gives you all the information that you need, depending on what state you're in. So you need to tell us what state. So if you want that, just call and ask us for it.
Yeah, I mean, it's a big topic, and in the future we'll talk more about other things like cybersecurity and hacking. There's all this.
I think these are all becoming more and more important. What we're doing, maybe we ought to have Mike in one day to talk about cybersecurity and what we're doing to protect our client information.
Yeah, that'd be great.
So that's the end of our August update. This is Drew Tignanelli saying God bless.